Tuesday's market closes mostly higher except for soybeans. Ted Seifert, our ag hedge, is joining us here to visit about what happened throughout the day. And soybeans down, as I said, and talk about the Argentina currency play that we saw that kind of pressured that market today.
Yeah, so the news broke over the holiday weekend, really about midday Monday, that Argentina was going to open the door for the month of September for their farmers and their exporters to enjoy a vastly superior exchange rate than what they're used to. They're at 136 peso to the US dollar. Generally, it's been pinned there. They're talking 200 to the US dollar. So they're getting almost 35% more, which is significant. I mean, it's a very significant amount. And they said that they would allow that for up to $5 billion of $5 billion US equivalent of Argentinian soybeans, which pencils out to a little over 350 million bushels of soybeans. And this is not Argentina's typical big sales time of the year. Really, it's ours. So it's going to be competing directly with the U.S. window of opportunity to sell soybeans. And I think it's really Argentina says it's to bring in U.S. dollars into their country to help their economy, to help their farmers. But really, I think they typically carry between 8 and 14 million metric tons of soybean stocks as a currency hedge. I think they're trying to draw some of that out. And again, it's going to be competing with our season directly. So this could be a problem depending on how much the Argentinians really take advantage of this program. If they take advantage of the full amount, I can't imagine the USDA has all of those bushels accounted for
Right.
on their export sheet. And I think that would cut into ours. And just quick math on that, if it's 80 million bushels more than expected, and we were to lose that sort of business, well, that's equivalent to a bushel on our soybean crop. And, we've been sitting here arguing about the yield on soybeans because of the weather, and, corn was higher on the weather today. But if we're going to lose a bushel's worth of soybeans in export business, then it doesn't have to be such a big conversation anymore.
Right.
So, yeah, it's an interesting thing. We're all trying to figure out what it's going to mean going forward.
Absolutely. So the market reacted negatively to it. Corn went the opposite direction, as you pointed out, and we've seen some obviously differing opinions about fundamentals. More bearish for beans with bigger yield, but a cut perhaps expected in the WASD for corn. And so we continue to be pretty sensitive over there to yield talk and weather talk, don't we?
Yeah, absolutely. And everybody's kind of in anticipation of what the USDA is going to do with their yield. There's been a wide range of guesses out there. A lot of people think they'll stair step into it. Some people think they've been, they might just rip the Band-Aid off as they have done a couple times in the recent history. And then what does it mean for the balance sheet? What happens on the demand side of the equation? There's a lot of people that don't think corn demand can really come down, so that any reduction lower in the yield is going to directly translate into quite a bit lower ending stock. So it's fundamental analysts are having a hard time getting really bearish on corn at the moment. I'm going to say, though, at some point we will stop trading the weather.
Okay.
The things that we were seeing on the western leg of the crop tour, the worst areas that we're most concerned about, well, those fields are going to be ready to get harvested in a week or so. They're not adding or subtracting anything from yield at this point.
True.
It's the better areas. Western Iowa was a bit better, but still kind of concerned going forward. Yeah, there can still be some yield shaving going on, but at some point we'll get past that. So you wonder what happens. It's going to be a very interesting week next week, getting into the USDA WASDE report. Very curious to see what they have to say on the demand side of things, especially.
From a technical standpoint, we got above, I think, the 100-day moving average in corn again today, didn't we?
Yeah, we eked out a close just above it, right? And we had done that early last week, I think Monday, and then we gave it back towards the end of the week. We were able to do it again today. So now the real question is, do we get any technical follow through?
Right.
Will that really get the larger speculators really interested again? It didn't really do it the first time, but maybe the second time's a charm.
Yeah, and Commitment of Traders shows that the funds are actually adding to their length in the corn market. Wheat market, not a lot going on there today except for a little bit of spread activity, but I was surprised that we were able to hold together with the dollar so much stronger.
Yeah, I think the wheat really chose to focus on the corn today.
It did, okay.
Yeah, that dollar stronger, that's been a feature for some time, but you also have stock market reverse lower, you had crude oil reverse lower, you had a lot of sort of concerning things happening in commodity land. But wheat, you never know what wheat's going to focus on any given day. Wheat seemed to be looking at the corn being higher and wanting to join along with that.
Okay.
You also say that wheat's been in this really tight range and it's towards the lower end of it. So if it's not ready to break out to the downside yet, then it's gonna kind of just hover around in here for now.
What about the cattle market? Charts look good, especially those back months, which have been scoring some new contract highs once again. The funds, are they ready to get back in here and push this thing, do you think?
Yeah, that's a great question, Michelle. And you got to say, the livestock sector as a whole was probably the bigger winner of the day, with corn being up, double digits there right on the close.
Right.
Feeder cattle were able to hold on to some strength. Live cattle able to hold on to strength, even though you had a reversal lower in the stock market, which usually triggers concern about demand. But at least today, that wasn't really the case. Even hogs managed a higher close, and we are still in these upward trending channels. From a technical perspective, which is what the funds like to see, you have pretty good looking charts right now. So maybe they will. I do worry that if we are to extend the losses in the stock market after some bad technical action happening there, if maybe they shy away and are hesitant to get back in. So that is a concern. But at least from a chart perspective, there should be some encouragement for them.
Great. And the hog market charts don't look so great there, that's for sure. But the cash market is falling like a rock here. Just a little short covering pop then today is all, you think?
Yeah, it does seem like we're trying to find sort of a near-term bottom. It has been a pretty sizable correction off the highs. And I do think we've kind of gotten into a value level here for the hogs. So I'd like to see it just kind of stabilize. And I liked what we saw here today. At some point, if we are going to slip into this big recessionary fear or an economic slowdown going into the fall and the winter, people might start buying more pork instead of the higher priced beef cuts. So,
Right.
Maybe domestic demand actually does better in a recessionary time frame or situation. That might actually be bullish down the line for pork and for lean hogs.
All right. Well, appreciate your analysis, Ted Seifert, Ag Hedge.